We've just published our Global Emerging Trends in Real Estate report in partnership with the Urban Land Institute and PwC. And what that clearly shows is that we, in the industry, there are unprecedented levels of uncertainty around geopolitical risks. But what is surprising is despite those clear high levels of uncertainty is the amount of positivity there is around capital flows into real estate. And I think what's driving that are a number of factors. One is the chase for yield. One is the fact that institutions are historically under-allocated to real estate, so there's a structural change that's happening there. And this is driving an increased focus on alternative assets, more operational assets as people search for yield, but also an increased focus on the real asset space. So areas like the overlap between real estate and infrastructure. I think the sharing economy is influencing real estate companies' decisions in a number of ways, like for example the increased amount of flexible office space that's prevalent in the market, and that's expected to grow over the coming years. But there's a huge range of areas. I mean, take for example the impact of driverless cars on cities. That could potentially free up space, it could create much more livable cities. Equally, it could mean that people disperse from cities and we see a much more sprawling aspect to cities. No one really knows how that plays out, but it's sure to have an impact on real estate values. One interesting example where I think the sharing economy is really going to gain much more ground is in the logistics industry. There's a lot of attention at the moment around congestion in cities, and the delivery logistics aspects plays a big part of that. For example, air quality in the City of London. So I think what we'll see is much more effort and focus on logistics becoming much more efficient, and we'll see the rise in what's known as urban consolidation hubs. And what this is about is making retailers and delivery businesses work much more effectively together to coordinate deliveries across the city, so we see much less congestion, pollution, and all the negative effects of all those vans driving, crisscrossing across the city. So I think sustainable city logistics will be a key area where the sharing economy is going to have a major impact. The biggest impact of the prop tech industry is around how we use data, information that drives the quality of real estate performance. And in that respect, it's not really about prop tech or technology, it's just about incremental improvements in the efficiency of the real estate business as we drive to provide a better end product for consumers. So that's much more of a subtle change. We're seeing the boundaries break between individual real estate sectors. We see examples where residential developers are teaming up with car sharing services to provide a better product to the end user. So that's a combination of mobility services and real estate. On the investment side, we're seeing businesses like the huge Japanese technology business SoftBank investing or just about to invest in a large stake in WeWork, a real estate business. So it's these breaking down of boundaries, and it's all being driven, or a large part of it is being driven by technology, where technology is the enabler for this change.